Good afternoon, everyone. In today's video, I'd like to talk about our new Scalper Volatility Box models, which are going to be coming out for all Futures Volatility Box members starting this Sunday in a beta format. Two of the most common requests that we've continuously had, I think, from multiple members are around A, having more trade opportunities in the four major markets. So this is the S&P, the Dow, the Nasdaq, and the Russell. And then to also try and reduce the risk of the trade. So with the increase in volatility, we also saw that the risk required to try and make some of those really nice rewards increased. And so with the scalper models, the goal is to get back to the same small risk size where you can risk a small amount to try and make a small amount and then see if that leads to some really nice longer term winners based off of our levels. So stay tuned. We'll take you through the journey of how we got to the scalper models. And for all of our members, you'll get a beta version of this starting Sunday. Now, up until now, we've had our most aggressive volatility box models, which have been our aggressive models. Using that, we look for breaches of either side's volatility box cyan entry line, which gives us a place where we have an edge to try and look for a reversal in the market once we get our reversal signal and the edge signal confirmation. Now, however, what we have noticed is for the past few weeks, we've done a whole lot of chopping sideways in at least our major markets. So the S&P has chopped around sideways, the Dow looks very similar as well, the Nasdaq has broken a little bit more outside in terms of not chopping sideways, but our actual movement has been a lot more gradual and systematic, not really giving us a place to fade. And if we take a look at the Russell, same thing, right? Really a whole lot of chop sideways. So with that, we know that our aggressive models are really good at helping us find edges wherever price actually starts to fall when volatility picks up. So now for all of our futures volatility box members that are looking for more scalp type trades, right? You like more opportunities, more breaches of our volatility box edges. That's where I'd like to show you this thing that we've been working on. It's our new volatility box scalper. And so if I click OK, I click apply here, we can now take a look at how the scalper gives you a better opportunity, a better place to try and get long and short the market and play some of these reversal moves where our risk is much lower than what it is typically with even our most aggressive models, right? So keep in mind here, these are meant to be scalping trades. You'll notice like in the Russell, for example, our risk here is close to 4 points compared to what's usually 7, 8 points on the aggressive model, right? And if we take a look at the S&P, you'll notice the same thing. Today, we had a really nice opportunity to get long using the scalper models. And this is something we're still testing through tomorrow, fixing the final bugs, fixing the final kinks before we make it available to all of our futures members on Sunday. So the S&P had a nice opportunity here today, and we'll also try and include a sample trade plan as well on how to use the scalper models. It will be a little different than the aggressive models here. Your risk is going to be lower, and you can see that some of these moves do pay off dividends, but that first target is still exactly what we risk, right? We'd like to start to take money off, pay ourselves, but you can see that our T2 still works the exact same way with that gray target line. If we move on to the NASDAQ, on the Nasdaq, you can see that we had multiple breaches today. Our first breach was right here, and our second breach was in the subsequent hour compared to just the one in the S&P and the one in the Dow. So I'm hoping that this new Scalper Volatility Box model is going to be really useful for our traders who focus on the four major indices. Those are the models that are going to be supported, at least for the start of this. And then if there is more interest, we can start to look at adding some more markets. But I think with the level of interest in the four major indices, this should help with giving us more opportunities to pick fades for the upcoming week if we do see more of this sideways action. If we do start to see volatility pick back up, that's where we have our aggressive volatility box models ready to go with the same level of edge that we're typically used to. All right, so stay tuned for this update on Sunday. Hope this video helps, and as always, we'll see you in the next update. Take care, everyone. Good luck trading.